In our previous video titled Longer Life Funds, we talked about the motivation for private equity firms to raise funds that last beyond the traditional 10-year life. Since that video was published in 2018, many private equity firms have now raised their second longer life fund. For example, in 2019, CVC raised 4.6 billion euros for its longer life fund, CVC Strategic Opportunities Fund 2. And in 2020, Blackstone raised $8 billion for its longer life fund, Blackstone Core Equity Partners 2. Well, imagine that instead of having to continually raise funds, private equity firms can access capital on a permanent basis. Well, that is what we will talk about in this video. In this video, we'll talk about how private equity firms are accessing permanent capital by buying and partnering with insurance companies. We will start by answering the question, what is permanent capital? Then we will answer the question, why private equity firms are buying insurance companies. And then we will talk about why have insurance companies been receptive. And we'll end the video with a final thought. So let's get started with what is permanent capital? Permanent capital is just capital that is available for an unlimited amount of time. Not 10 years, not 17 years, but permanently. Many investors, such as sovereign wealth funds that we talked about in our previous video titled Sovereign Wealth Funds in Private Equity, look way beyond the traditional term of private equity funds. Well, one source of permanent capital for private equity firms that we haven't talked about that much in our videos is insurance companies. So let's move on to why private equity firms are buying insurance companies. As you could probably guess, private equity firms are buying insurance companies because they are a source of permanent capital. Insurers collect money from annuity holders, which can then be used by private equity firms on a regular basis to invest in private companies. Some examples include, in 2021, KKR bought 60% of Global Atlantic, valuing the insurance company at approximately $4.7 billion. The transaction added about $90 billion in assets under management to KKR. In 2021, Blackstone announced a strategic partnership with AIG that includes managing certain assets. And earlier this year, Apollo merged with Athene in a large merger between the private equity firm and the insurance company. These are just a few examples, but there have been many others over the last few years. Now, why have insurance companies been receptive to being purchased by private equity firms? Well, there are many reasons, but one that I'd like to highlight is the current low interest rate environment. Insurance companies look to invest their capital, and with low interest rates, it's difficult for these companies to generate cash from their investments. So with the influx of cash from the private equity firms that are purchasing part of the insurance companies, along with the private equity firms offering access to investment products that may do well in a low interest environment, well, it makes sense for insurance companies to enter these partnerships with private equity firms. Now, will this trend continue? Well, let's see if the benefits mentioned in this video will outweigh the drawbacks of rising interest rates in the future, as well as potential regulations that governments might put on these transactions in the future. Now, here's a final thought. It is difficult for private equity firms to continually raise 10-year private equity funds. It uses a lot of private equity firm resources and puts pressure on the firms to increase IRRs in other funds for fundraising purposes. Owning or partnering with insurance companies can be a great source of capital to back investments and acquisitions. Something that Warren Buffett and Berkshire Hathaway figured out years ago when the company bought GEICO back in the 90s. In this video, we talked about how private equity firms are accessing permanent capital by buying and partnering with insurance companies. We answered the question, what is permanent capital? Then we answered the question, why private equity firms are buying insurance companies. And finally, we answered the question, why have insurance companies been receptive? Can you think of other private equity firms that have partnered with insurance companies? Maybe like Carlyle and Fortitude? If so, please share them in the comments below.